Welcome to The Explainer. Today, we're digging into HP's latest earnings and telling you the real story behind the numbers. So this week, it's all about the new quarterly report from tech giant HP. It just dropped on February 24th, and it's really our first big look at how they're kicking off the year. So the question on everyone's mind is, how would they actually do? And what is this report really telling us about where the PC market is headed? All right, let's get right into it. And, when you first look at the numbers, things look fantastic. I mean, HP pretty much blew Wall Street's expectations out of the water. But, and this is a big but, that's not the whole story, not even close. If you dig just a little bit deeper, you'll find that these great numbers are actually hiding a massive challenge that's brewing for HP, and honestly, for the whole industry, for the rest of the year. Okay, so first things first, let's talk about those headline numbers. The ones that, on the surface, paint a really positive picture for the start of their year. First off, revenue. Wow, they just blew past what everyone was expecting. The street was looking for around $13.87 billion, but HP came in at $14.4 billion. That's a beat of more than $500 million. Not bad at all. And get this, that $14.4 billion isn't just a big number. It's almost 7% growth compared to this time last year. In the market we're in right now, that kind of year-over-year jump is a super strong signal that they've got some serious momentum. And it's not just about sales. They also nailed it on profitability. Their earnings per share, EPS, landed at 81 cents. That didn't just beat the forecast. It was right at the tippy top of their own prediction. That just screams good execution. So you're probably wondering, where is all this amazing growth coming from? Well, a big piece of the puzzle is a trend that is absolutely reshaping the entire tech world right now. And that trend is the AI PC boom. I mean, this part of the story is huge. The adoption rate is just skyrocketing. Think about it. AI-powered PCs now make up more than a third of all the computers HP shipped this quarter. That's incredible. And the interim CEO, Bruce Broussard, he pointed right to this. He was talking up their strong products and their whole future of work strategy. But did you catch that last part of his quote? He said, even as we navigate industry-wide headwinds. That right there, that's a little bit of foreshadowing for what's coming next. And yeah, that brings us to the big but in this story. Because for all the great sales numbers and all the excitement around AI PCs, the earnings call pulled back the curtain on a massive problem that's brewing just under the surface. This is that headwind he was talking about. So what is it? What's the one thing that could throw a wrench in all this great momentum? Well, it all boils down to one tiny but totally essential component that's inside every single computer they make. We're talking about memory. DRAM, NAND, those little chips. Just last quarter, HP was saying memory was maybe 15 to 18% of the total cost to build a PC. And today, that number has exploded to around 35%. It's basically doubled. That's a huge jump. And if you want to put a hard number on it, listen to this. Management said on the call that the price of memory has shot up by about 100%. 100%. And that's just since the last quarter. That is a massive, sudden hit to their costs, and it puts a major squeeze on their profits. So, okay, that's a huge problem. How is HP fighting back? Well, they didn't just drop this bomb on investors and walk away. Nope, they laid out a really clear, step-by-step plan for how they're going to toggle this. It's basically a three-part playbook. First up, secure their supply. They're locking in long-term deals to get all the memory they're going to need for the whole year. Step two, cut costs everywhere else. They're getting aggressive on finding savings in other parts of the business to help balance out the high memory prices. And third, shape demand. This means they're going to have to do some targeted price increases and maybe even tweak some product designs to manage the financial hit. Okay, so we've got this big problem, but we've also got a clear plan to fight it. So what does all this mean for the rest of the year? How is HP changing its predictions? Well, officially, HP is sticking to its guns and maintaining its full-year guidance. But, and this is a really big but, management is also telling investors, hey, because of these memory costs, you should probably expect us to land at the low end of our predictions. That goes for both profit and free cash flow. It might sound subtle, but that's a pretty significant warning. So, this all leaves us with one final and really crucial question. Look, HP seems to be executing their plan really well, and their playbook for dealing with this crisis looks solid on paper. But this memory price spike, It's a massive problem for the entire industry. So is their plan going to be enough to weather the storm and protect their profits? Honestly, only time is going to tell.